All right, well, let's see what we've got on the menu as far as the data released today.
Yeah, I mean, the problem with lots of this data that we've had this week is when the market's been so dominated by something big like Greece, the kind of sampling periods for these don't necessarily take into account current worries. And as you know, we saw kind of German retail numbers earlier this week, where German consumers have kind of been a bit spooked by what's happening in Germany. We've had some weaker manufacturing PMIs out this morning. Spain came in at 54.5 after expectations of 55.5, which is still strongly into growth territory, still strongly above that 50% mark. Germany's manufacturing sector picked up. They had an uptick in new orders. The Eurozone as a whole strengthened up to 52.5 from 52.2, kind of a 14-month high. Of course, you've got Greece, so this is all this sampling happened before the kind of the Greece concerns. But there is a kind of interesting kind of play at the moment. If you look, yes, if you kind of take Greece as a kind of a separate issue and as a kind of a shorter, kind of a transitory thing, if they are going to get bailed out, we have seen, and it's slipped into the radar because I think a lot of people are prepared for bad European news. A lot of people have written off Europe as being a basket case, but Europe has strengthened over the last quarter. Europe has pushed out some strong macro data, and we've seen improved credit conditions, we've seen improved lending to businesses, we've seen improved business growth, and there's perhaps a case that people may start to move out of more expensive, slightly highly priced US equities and start buying into value in Europe, because there is plenty of value out there. We've had kind of sectoral bear markets there. We'll say where we've had agnostic bear markets, people have just written everything off agnostically, but there is value to be found in Europe, and I think we're going to increasingly find that as we start to see the strengthening of data. I think we're going to see more and more people start to return to Europe.
Right, and just the QE there, even if it doesn't actually directly do anything, psychologically it's helped a lot.
Yeah, well, I mean, people look at what QE has done in the UK and what it did to the US. It was hugely supportive to equity markets, and whether you agree with QE or not, people are going to want to jump on that train.
Okay.
And finally, we had sterling to give a bit of battering on UK kind of manufacturing numbers. It kind of took a bit of a hit on. We've got that stronger pound. And we've also got Europe. We've got a slightly weaker demand for exports, and so the sterling took a bit of a hit on that. And that was slightly reflected in the financial stability report today from the Bank of England, where Mark Connolly said that obviously a lot of the questions did focus on Greece. He said we have seriously minimised our exposure to Greece, but of course that sentiment is going to knock on, and I mean we saw that in those manufacturing numbers and that demand.